Good evening, everybody. Moving up steadily. See the waves. They break out into a new wave. Looks like the same thing. See if they can break out. The main underlying factor, though, is they're still trading up above the T-line. That's the Dow. The NASDAQ, kind of the same scenario. A little bit. Staying up above the T-line. With some good strength on the NASDAQ because you got the best friend gap up. You got another best friend gap up. So you're still in this kind of upward trajectory. So the 110. The underlying factor is you can't really analyze what the market is doing based upon each index individually. But when you see all of them together and they're moving up, staying above the T line, at least you have the added analysis that you've got. The added analysis that there isn't any major change of investor sentiment going on. So as long as we know we were in the steady uptrend, at least we know, we want to stay predominantly long, but there are some good shorts, which we'll get to. Let's see, which ones? Crude oil. Straight up back up to the $58 range on the, this is in the February contract. I don't think we can get the December contract anymore. No, it's gone. Let's see if there's a January contract. And still the same thing, right there at the $58 range. Let's see. Over in the futures room, right now, you could be buying lean hogs. Again, observe the obvious. Look where your bearish harami occurred. Right here off the 50 with a gap up, a little stutter step. You can still be buying this on the basis that we're still in a wave 1, wave 2, wave 3 type move. Oh, did I say that's live cattle? I'm sorry. Did I say lean hogs? Lean hogs were still long based upon kind of your stick sandwich. We're staying long. Notice how when they gapped up on Friday, they gapped up through this downtrending channel. And then we shorted wheat. March wheat. See how it's rolling over. Making this kind of your likely target down in that area. Okay. We recommended PDFS because of the message. Look at your slow curve fry pan bottom. Look at kind of your bigger fry pan bottom with the dimple area right here. Remember our message is when they gap it up and they sell it off, there's still a message here. But even though they were selling it off, the message was they gapped this up with new strength. So what are we looking for? Waiting for the profit taking to be over. So we're seeing something like that. Here, look at GameStop. Same scenario. Bunch of dojis. Your message, your doji. Remember our doji rule? If it opens positive, it's going to trade positive. GameStop's another one that's got the message signal in progress. We recommended Flexion. Today, if it traded positive, then it immediately turned south. So what are we looking for now? We're still looking for that stick sandwich type setup. That's UEPS. Looking for this one if it opens positive. Notice where it's coming from. There's your slow curve, your fry pan bottom, your doji sandwich breakout. So there's new buying in there. Edit is another one. Coming out of a fry pan bottom. Look where it's trading on the stick sandwich type setup. Just above this level. Now I say stick sandwich type setup. You usually want to see a stick sandwich close up pretty close to the top of the previous day's trading, making this kind of a sandwich. I'd still be a buyer of this one on positive trading tomorrow because of the stick sandwich breakout of the fry pan bottom. See, GLYC, we've held on to this one just because of the bobble breakout, consistent move to the upside, and then it's broken out nicely. Again, kind of a big fry pan bottom with a bobble breakout in between. The more pieces of evidence that we can put into our analysis that there isn't any selling, that they're doing patterns or signals, the better off. A stick sandwich is, where was our best stick sandwich? Oh, I'm trying to think of. Stick sandwich is, well, I know I'll come across it. Stick sandwich would be a big up day, a big down day, then a big up day where the down day was sandwiched in between. I can't remember which one was it. No, that's not really a stick sandwich. Are these? There's a stick sandwich. All right, thank you, Ann. Stick sandwich, big up day, big down day, big up day. You can see that one sandwiched in between. I'd be a buyer of this one on positive trading tomorrow. All right, so observe the obvious. You're in an overbought condition. You have a hanging man and a doji. And it SQ opened lower today. We closed it out immediately. Where was our first logical target? Back to the T-line. But the fact that you had a doji after a hanging man and a gap down in the overbought condition, what was that telling you? That was telling us exactly what we expect, knowing what the signals are, especially up in the overbought area, and look how far that kind of moved a little bit away from the T-line. The only way to stay in square today was it had to open positive. The fact that it opened lower, got out of the trade right in here, which happily we did because it was down almost 8 points on the day. So when we do our stop loss, what is our safety stop? Yeah, it could be vice versa. Big up day, got it backwards. A big up day, a big down day, then a big up day, with the one being sandwiched in between. So if you have a slow curve, a breakout like this, where you've gone from 10 to 22 in 4 days, and they are gapping up in the overbought condition, if you held on here, where is your safety stop? Right there, exactly. Because if there's enough force for them to bring it back down through that level, where do you think they're going to take it? They're coming back down to test the T-line. Yes, a short stick sandwich is a big down day, a big up day, then a big down day right behind it. So you've got the up day sandwiched in between. I don't think I would short Riot. I'd probably be more apt to short Square, but I'm still would watch to see how they open this tomorrow. Now, if they open it lower, it needs to continue to trade lower, making one of these moving averages your target. If it opens higher, you don't short it. If it opens higher, what would you suspect? That they're at least bouncing it back up to the T-line. Now, if you're aggressive, when it gets up to the T-line, you watch a 10-minute chart. If it starts backing off, that's when you start shorting it, because usually what they'll do is they'll bounce it up. If they fail the T-line and start taking it back down, that starts you selling again. MARA. This is a very simple example of here they opened it positive. You weren't near the overbought area yet. Then they opened it up here and started trading it positive. Where was your safety stop? Right where they opened it, because logic says if they're taking it up, things are happy. But if they're taking it up and they have enough selling strength to bring it back down through the open, that tells you the profit taking has started. Almara's down $2 more, so it's down in this range. So again, just think of what human nature is. Not so much looking at the pattern or the signals themselves, but just think what human nature is doing in something like this. You've gone from $1.50 to $2.20 or whatever. Opens positive, goes to 6. Opens positive and trades up here. If they come back down through that level, what do you think everybody that's in this stock is thinking and doing? They're thinking, oh, everybody's starting to take profits. I better start getting out of this. That's the signal. That's the information that we're alerting ourselves to, is when they start turning it around, everybody's going to start bailing out. If you're in a strong uptrend, then you finally see them start selling it off hard, what do you think everybody's going to do? They're going to start selling it off. They're saying, all right, that's where the profit taking started. We just have it visually defined for us much quicker, just in the fact that we know what should happen after a doji. It should move in the direction of how they open after a doji. The fact that they were gapping it down in the overbought area that far away from the T-line close it out. The probabilities are in your favor to close out that position. That's the exact reason why we're looking at candlestick signals 300-400 years after the Japanese rice traders identified them for us. Not only identified them, but also explained what was going on in investor sentiment. Same scenario here. When they opened it lower, my first reaction, if I was holding on to this, was closing out the position immediately. Because notice what's happened or hasn't happened this whole way up. There really hasn't been any profit taking. They open it lower up here after going from 310 to 8 or 780. Open it lower, way up in the overbought area, that far away from the T-line. What do you think is happening? They're taking profits. You close it out. What's immediately? Because what's your worst case scenario? You close it out here. If they have enough strength to bring it back up through this level, you buy it back. So you gave up a little bit of potential profitability, but you protected yourself from giving a lot of actual profits. Let's see. I had this one written down from a few days ago. There's your bobble breakout. And this is GLNG. Oh, pshaw. I was going to call them and see how to get rid of this maroon line so we can see what the signals are. What is a bobble breakout? A bobble breakout is a J-hook pattern much more defined. Look what happened on your first trend. Where did it stop? At the first resistance level up here, the 200-day moving average. What told us they were resisting here? A doji followed by weakness. Then where did they come back to? Right back to our T line and brought it back up. What happened when they got to the resistance level? They went through. That's your bobble breakout. Got up here, they bobbled it, now they're breaking out. What type of pattern is it setting up if you took out the 200-day moving average? You got your J-hook pattern in progress. The bobble just is a much more defined, much more clearer indication of when to take profits at the resistance level and when to buy back in. ILMN. This is what you call observe the obvious. Where was the breakout? Right here at the doji sandwich. What's this tell us about our next price move? More than likely, we're going to be in another move like this. Anytime you can see an obvious resistance level, and I say obvious, you don't have to be a highly skilled technical analyst to see that every time they got up to this level, there's a line right here. There's a resistance level. It's when they break through that resistance level that a new trend is started. Break through the resistance level. A new trend is started. What was I doing? What is the minimum length of trading history you want to see for a recent IPO where you consider it a trade? Oh, Richard, I don't know. Just enough to see if there's any patterns setting up. For example, Roku. There wasn't enough history here. There wasn't enough history here. That told me I had a new pattern, and this tells me I have a new pattern. So it doesn't matter about how much the length of the history. It's just where is it? Where are we able to start seeing patterns developing in the price move? HMNY has got a good-looking fry pan bottom, but there's one unique factor about this one. It's got fantastic percentage moves. To go from here to here, you're looking at about a 30-35% move. To move up here, you've got 140%. So the percentage move on this one is very good. So there'll be a lot of good-looking charts, but if you look at something like, I'm just going to pick out one, say 3M, 3M might have a good pattern, and it could move back up here, but that might mean it's all of 2%. So the question is, if we've got the supply of stocks based upon simple scans each night, why would we go after something that has a 2% upside potential when we find another chart that has a 40% upside potential? Because we can see what's happening in human nature, obviously we want to take advantage of the charts giving us the biggest percent moves. Whoops. SORL. Nice J-hook pattern. And where's it coming from? Yeah, big rounding bottom. Notice where this uptrend started. Came up through the a bobble breakout, pulled back, hit the 50. Second time it hit the 50, had an inverted hammer with a bullish confirmation. What do we know about an inverted hammer? We know if it opens positive, there's probably a 95% probability or greater that you're going to trade positive. How will you trade Roku? I probably wouldn't trade Roku yet, but if you're trading Roku, I'd buy it if it came back up above today's high, because that would tell me I have a J-hook pattern breaking out. ILMN, I would suspect a 45 degree off of here. If I was buying this on positive trading, I wouldn't want to see it close back below the halfway point of the candle that told me the bulls had broken out. If the bulls were able to, the bears were able to knock it back below that halfway point, that means it's not a real good breakout just yet. ABX, you can see the fry pan bottom. Gold, you can see the fry pan bottom with the added benefit of seeing what it's doing right here at the 200, but it's not going below that level. Now it's come up through the 50. You've got the potential of another move to the upside, which means it's going to bring up all the gold stocks. We did this one, IDPT, DT. Stick sandwich, breaking out through this level. Got a left-right combo, a Morningstar signal, a breakout through the 50. I'd still be a buyer of this one on positive trading. Let's take a gander here. See what the. You also have the factor that you can pretty much draw a line right down through these tops. And what did they do here? They gapped up through that resistance level, making it that much more evident that there's a new investor sentiment. So if you have something like this, you can see where it's broken out here. You had the big breakout. You had the consolidation, but you have a J-hook type pattern. Where do you think your next likely target eventually is going to be? Probably back up here to the highest point that somebody was willing to pay for it. Where would I buy gold? More than likely, you can be buying it just above yesterday's high or Friday's, or that's today's high. We came back up through this level. Kind of telling you they're continuing this uptrend. I'd be a buyer if it came back up through the high of today. Trip, just illustrating this, notice you got kind of a cradle pattern down here. You can stay long on this and you just watch for the obvious. The obvious is there's a resistance level here. So if it got up in this range, I'd definitely watch to see what it was doing at the 50-day moving average. Okay, we've got a lot of fry pan bottoms. Got some people in this one, or CDNA. And notice what you had here, kind of your little scoop pattern. Now kind of a fry pan bottom. You stay long, but where do you put your stops? If this opens positive tomorrow, I stop right here. Today's low. It shouldn't come back, or today's open. It shouldn't come back through there. If it opens positive and starts trading positive, then I put my stop at the open because it shouldn't come back down through there. Why am I protecting at levels where it shouldn't come back down through? Because you've now moved up into the overbought area. You want to make sure you've got your protective stops in once they get up into that overbought area. The fry pan bottom on PTFS. This is why fry pan bottoms are viable, because that means something's happening. That was in CUDA. Obviously, we weren't in that one, but somewhere in here, they changed investor sentiment and started trading positive. Why in overbought? Ben, what in why in overbought? Why buy in overbought? On a fry pan bottom? Because the difference is you're buying the signals when the stochastics are in the oversold area. You're buying the patterns usually when the stochastics are already in the overbought area, but that's the area where you're looking for the breakout to occur. RXDX. There's kind of our little Morningstar scoop type pattern. Yeah, so there's two different classifications. Is you're buying the signals when they're in the oversold area, buying the patterns, usually when they're in the overbought area, because that's going to be their breakout area. Same thing that we were kind of looking at for Juno, kind of a fry pan bottom. What did we want to see today? Positive trading breaking us out, which it didn't do. Oh, on our XDX, yeah, if you stopped out at the T line, yes, you get back in. Now, where is a good place to get back in? I would probably not get back in until it comes up through this high, because what's that high telling us? That it's breaking out through this level. So if you got stopped out today, yeah, that's nothing to be, I want to say, ashamed of. That's what you should have happened here. But now told you, all right, it wasn't the time to be stopped out. Get ready to get back in, but I'd wait for it to have another crucial breakout, meaning breakout through this level, to tell me new forces coming in. You stay long. There's one simple rule that if you've got into a fry pan bottom, you just stay with it as long as it doesn't close below the T-line. Because it's not a trade based upon a signal. It's a trade based upon a pattern. And what's the difference between a signal and a pattern? A signal is a one-day reversal, or telling you what's happened is a change of investor sentiment. A pattern is a consistent buildup of an investor sentiment. So until they can close this below the T-line, you just stay long. Is the gray line, the light gray line is the 20-day moving average. The darker gray line, which was kind of stupid to make them both the same color, is the 34 EMA. Gray line is the 34 EMA. Okay, TA. You're going to go after this. Has this been opening and trading positive? Still not giving up on it. If it comes back up through these levels, we'll buy it, because that tells you they're kind of breaking out of this fry pan bottom. Notice where your dimple is, right here. About the halfway point from here, about here where it started breaking out. How do you utilize the 34 EMA? Just as another, use it as a support and resistance factor. I had used it a long time ago and just kind of took it off. I don't know, probably because I forgot to put it back on a long time ago. But after seeing Doug Campbell's presentation the other night, yeah, realized that it was effective, so I got it back on there. More than likely, I could probably come back up and take the 20 off and just keep the 34 on there, because probably the 34, and that, yeah, Jamie, you can do that. If it doesn't look like it's helping, take it out. It is more effective in futures, yes. What else are I looking at here? BECN, little fry pan bottom breakout. And Skechers, kind of your fry pan bottom breakout. It looks more like a fry pan bottom the bigger you make it. But notice where you are right now, right at the breakout area. So the advantage of knowing that you're right at the breakout area gives you a very clear indication. If it opened positive and started trading positive, you can be buying because it broke out. If it opened here and traded back, started trading back down, what's it telling you about the breakout? It's not there. You just leave it alone. ABBV, yeah, slow fry pan bottom, but more distinctive on this chart would be this downtrend, which is just breaking out. So, yeah, I'd be a buyer of this one on positive trading because it is a slow curve and it's breaking out of this wedge formation. Oh, this is what I was trying to find earlier, kind of a cradle pattern right in here. And the cradle pattern is very distinctive in the sense that you have a big candle, a bunch of flat dojis, and then a bullish candle that tells us more than likely, again, we're kind of would be watching the first resistance level, figuring you've got kind of a wedge formation in progress. So if I was buying right on positive trading tomorrow, my next target is here. Now, is that a bad target? It looks like you're probably at least 10, maybe 12, 14% just to get there, and that's a decent amount to make on a trade. You use volume. You don't have to, but if you have additional volume on a breakout situation, that's just that much more confirmation that that everybody that was seeing it at that level is starting to jump in, making it a little bit more confirmation that we were heading higher. Another kind of fry pan bottom with the anticipation that it's going to come back up about that level. So from here to there is about a 10% move, which again looks like it's heading for the 34. And then you just see what happens at that level. EXPR, another little J-hook pattern, your classic fry pan bottom J-hook pattern. I would suspect another move in the making like this. Hold on to your individual requests until I tell Jim to do the double line, and yeah, then keep a maximum of 2 tonight. RGC. Oops. Same scenario here. This is why you want to know what your patterns look like, and you get the added benefit of knowing what each one of your individual signals look like. Look what happened right here at this little downtrend. Your doji sandwich. What do we know about a doji sandwich? Well, first of all, we knew that if it opened positive right here, that this candle right here was going to be the same magnitude as this candle right here. And if that's the case, number one, just on a positive trade in itself, it's okay. And two, it's telling us this downtrending channel is being breached. And what do we know about the results of a doji sandwich? There's probably going to be more upside. Any particular advantage with the 34 EMA? RT, no, it's just another viable support and resistance level. And it's not like you're cluttering up the chart by adding one more. Now, I could probably come right up here right now and say remove that one, remove the 20. The 20 is not as effective when you're not in a major uptrending position. So right now we've got the 200, the 50 as simple moving averages, and the T line and the 34 is exponential. Yeah, there's nothing magical about it. It's just, and yeah, I tell people the benefit of candlesticks is that we know that they work, or they wouldn't be around after 2 or 3, 400 years. So anytime we add something to the chart, if you find it's not helping you any, take it back off, because the main criteria of looking at a candlestick chart is the candlesticks themselves. Everything else should be a beneficial confirmation from that point. ESPR. ESPR, here's kind of your bobble pattern. It came up, resisted, pulled back. Notice when it pulled back, hammer, left-right combo, and then notice where your doji sandwich occurred. Broke it out, telling you had more upside. I know. Can't believe it. Speaking of which, I will do a special again. People are asking. People were wanting to know if we were selling the Who is Santa and How Did He Get to the North Pole book. Well, I'll put a link out pretty soon. Don't want to distract from investing, but a lot of people keep asking about the Who is Santa book. They like to give it away as presents. This is kind of the opposite of your bobble. As you come up through a major resistance and come back and test it as support, then you have a best friend gap up. Next target should be the 200-day moving average. What was that? IRWD. This Party City. Same scenario here. What started this uptrend? Your kicker signal. Then your left-right combo. Notice what it hasn't been able to do. It hasn't been able to close below the T line. I wouldn't be afraid to be buying this one on positive trading tomorrow. And CIPO. IB. This is when you have a big day like this and they bring it right back down, what's happening there? Obviously profit taking. If they open it up and start trading positive the next day, what's that tell us about this move? If the profit taking is over, whatever this signified is telling you it's going to continue. And BIDA was trading a little bit strong. Oh, cat. Trading a little bit stronger, but it's doing a little Morningstar signal. Just on a quick trade, if it opens positive tomorrow, it's telling you the buyers are right here at the 5th or at the 200. First bounce should be back up to the T line. On the short side, obvious failure. You can see what your trend is. It's a downtrend. This is why when people say, well, if you're buying here, where's your next target? The answer is, let's see what it does when it gets to the 50. We can see what it does when it gets to the 50 because of the type of signals. Spinning top, failure. What's that tell us? If we can make that one, I want to do trend channel. Pretty much do this. Let's do this. You got your trend channel. So where's your next likely target? Down to this level. Weight Watchers. That's significant. Now, what do we have going on over the last few days? You had a bearish engulfing, a close below the T line, a bearish doji sandwich. Where's the next logical target? Possibly all the way back down to the 200-day moving average. Killed the bear in the ice hole. That's right. Big, bearish, belt hold, dark cloud. Where would you think your next target is going to be? The 200-day moving average. What info do you get from the nothing? It's just another logical same thing as what information you get from the T line. The T line's been acting as a very viable support and resistance level. The 34 EMA also is a viable. It's not your main one. Obviously, I use the T line, but it gives you added information about whether if you see a resistance or a support at that level, that means that's where they were resisting or supporting. Oh, cat. The bigger the signal, the more compelling. So COLL can be shorted on weakness tomorrow, with this area again being your logical target. No, I can't. You're stealing right on my notes. Okay, cat for sale. Lowest bidder can still probably get this cat in a Federal Express package before Christmas. No, we're not having much fun here. Over here. Pain in the butt. Okay. Another one that's failed right at the, oh, Rick, I'm sure after a couple of months you could train this one to be stay outside if you just lock it out for a couple of months. NPTN, another one that looks like it failed right at the 200. Kind of a doji sandwich closed below the T line. Next logical target down here, about a 15% downside. This cat only loves me because her mother is not here. And I have to feed her. Play. Looks like it could. Okay, kitty. You're driving me to drink. Kind of a doji sandwich. First target here. Second target down here. I'm sure it will. SQM was a perfect breakdown of a dumpling top the other day with a bearish kicker signal. Now you've got a bearish kicker signal, came back up, failed at the 50, and now you've got a bearish doji sandwich. So if you've got a bearish kicker signal, a bearish doji sandwich, a dumpling top, which direction do you think this one is going? It's got the possibility of heading down to the 50-day or the 200-day moving average. Cena, another failure. Where? Right here at this downtrend. In at the 50. Where's your next target? Right down here somewhere. And trade desk. Kind of a bearish doji sandwich. If it opens lower, what pattern do you have setting up? A bearish J-hook pattern. Where's your first target? Seeing what it does down here, that's a good 10% away. And then see if it moves the same magnitude, giving you about that'd be about a 30-35% downside. All right, so with the market being not dramatically bullish, but not at all bearish, still better off having mostly long positions with a few short positions. Starbucks, I don't trade all that much, only because the percentage move isn't all that fantastic. Okay, are there any general questions on candlesticks? I know we're heading into the holiday season. We will be doing one Saturday training session on here fairly soon, going up the scale, meaning instead of just trying to learn a trading technique, go one step, doing all the things that you need to get yourself mentally prepared to trade successfully, kind of general rules of how you should or what you should be looking for, how you get mentally prepared, which then moves you down to looking for the best trading system, and then obviously below that, how to use that trading system successfully, keeping your emotions out of your trading. So there'll be a training session on that. Oh, intraday trading session. Yeah, John, that'll be a Tuesday night or a Wednesday night session. Charles, you're trading a signal when your stochastics are in the oversold area. For example, you're down here toward the oversold and you see your best friend signal, the signal should be bought. When you're buying a pattern, no, humbug. Try this one. When you're buying a pattern, you'd be buying the signal right here. You can see the bullish engulfing left-right combo. That's your buying that. Now you're right here on your pattern. So your stochastics up here in the overbought area, doesn't matter. When you break out, you'll be you're usually going to be in the overbought condition. How do lines do in holiday seasons? They don't do any better or any worse than any other time of the year. So remember, everything that is in a candlestick chart is information that's already built into all the information that's out there. So you still have to look at, remember, you're going to have charts that they announce fantastic earnings, and it starts trading like this. That tells you yeah, I've got that one written down too. That's telling you the fantastic earnings was already built into the price of the stock, and it wasn't quite as fantastic as what everybody wanted it, or that was it. So right now, if this opened lower tomorrow, I wouldn't be in it. I'd be out of American. Southwest, you can see, is not going on anywhere. Alaska Air, also not going anywhere. How about training for someone that still has a day job, wants to trade? See, Savage, yes, I should probably do that. Kind of how you have to use or the other criteria or the other restrictions you have to put on your trading when you're not able to sit there and watch it at the open or the close or extensively during the day. Where can you find guidelines for building scans used? Roy, they're not that difficult. Oh, I could probably repeat them to you quickly. But I'm looking, my trading universe is stocks trading greater than $5 a share. Stocks that are trading more on an average of 200,000 shares a day. That's my trading universe. That goes from 10,000 down to about 3,000. Then I scan by which stocks, my simple scan is which stocks had the biggest percent move today. Now, if the market itself, let's say this was the Dow and it looked like this, I'd be more apt to say, all right, which stocks had the biggest percent move today with my oversold criteria, stocks that had stochastics below 20. But right now, because we're in a market condition that looks like this, we definitely don't want to be looking for stocks that are oversold, because if they're oversold in this market, that means there's something wrong with them. You don't want to be going after them. So just scanning for the biggest percent moves or finding you stocks that have good reversal signals, number one, or they might be coming out of a pattern. I'll write that down. That we'll do that'll probably be part of the entry and exit. I'll have to get the schedule for December. See if we can stick a few Tuesday and Wednesday nights in here. Oh, Eric, I guess the first thing I would tell you to do is buy High Profit Candlestick Patterns book. That's got the meat of candlesticks in there. That's the way I would start. Then you can start browsing through the website and picking out the different areas that you want to get get further education on. So the basis of candlestick analysis is, yeah, there's flashcards there too. You also have a mouse pad that has the 12 major signals on. Mine's getting so worn out, I probably should throw a new one up here. And one of the most highly acclaimed decorative items is the 2-foot by 3-foot poster that every American family should have in their living room, showing the 12 major signals. Patterns, we have another, we've got another set of flashcards with the patterns. So to get those, you go to our products and services, and go down, and that should all be on one page. Make a blanket. True. That's right. Cyclopedia salesman. The pattern quilt. Yep. Yeah, this is all high tech stuff. Uh, Speaking of creating well work, all brokerage houses same. I had a buy stop trigger because an ask price was above my trigger. It was not an actual price. Yeah, that I'd go back and contest. You want to buy if there is a trade above that level. Yeah, we could do pillowcases. That way we could stick it on. Oh, and then I'd just have it as an extra for the guy selling my pillow. Just say you can throw these in as extras. I mean, we'd have pillowcases all over the world. Okay, I guess with that, Jim, go ahead and do the double line. All right, and now do the second double line. All right, we'll try to buzz through these moderately fast. Dan, just stay long as it's above the T line. ABO. This one I'd be a buyer, but I'd probably want to pay $17.50 just above this level, telling me that they've broken out to the upside. Whoops. Box. This one would have been a toughie. Again, your safety stop would have been at the open of Friday. Why? Because it gapped up in the overbought condition and you're that far away from the T line. It shouldn't come back down through there. If you stayed in it, it has to open positive tomorrow. Labu, that's If this opens lower, now you figure they're still taking it back down to the 200-day moving average. And Nugget, slow curve coming up, and I think that's kind of a result of your gold prices slowly coming up. AEIS, nothing there. You can see kind of a wedge type formation. I probably wouldn't be long or short this one. Netflix, same scenario. It's gotten itself into kind of a sideways mode. Wouldn't be trading this until it breaks out one way or the other. ENPH, all you can do here is stay long. Just make sure your volume is good. Monster, this one you can stay long as it doesn't close below the T line, which means in this case it has to open positive tomorrow. Corn, slowly rolling over. Corn is the least movement of the grains. But if you're short, I would stay short. Just watch to see what it does here. If it breaks this level, then watch to see what it does down at this level. What was the other one? Soybeans. January soybeans. Not trading this one just because there's really not a whole lot. It's still kind of stuck in the sideways movement. We're more into sorting wheat because of the dumpling top. Could have another, and it broke this support level. Should be coming down into this range. G-Pro. Oh, nothing wildly exciting. If you're long, you stay long. You don't want to see this one close below the T line. Again, if it closes below the T line, it tells you they've rolled it over. You want to make sure this is doing the support off the T line. Obviously heading higher up toward the 200. VRX, got the J-hook pattern. If you didn't stop out today with it trading back below the low of the doji, put your stop at today's low. It needs to stay above that level. And HRTX, nothing great here. If you like it, you can stay long. You can just see that you're in a trend channel. I wouldn't get real excited about this until they break it out through this level. Nothing wildly exciting here. All you can do is stay long as it stays above the T line. PPL, You can be buying this one. Just be conscious of this downtrending channel. So it needs to break this downtrend. So if you're long, just be a little bit more conscious of, in this case, seeing what happens once it gets back to the 34. Murphy, if you were long, you should have been out of it today. Now you don't have anything here. You either have a wedge pattern or a slow drift down to the 50-day moving average. MTRX, another one that if you didn't stop out today, it's going to come back and test the T-line. So watch to see what it does. You don't want to see it trade below the T-line. CRR, same scenario. You're up well above the T-line. Your stop should have been at Friday's open. If you stayed long, it has to open positive and trade positive. If it opens lower, close it out. Three, another one that has to open positive. Only reason you would have given it a little bit of leeway today with it closing that close to the T-line is because you can see the T-line's been an effective support level. So it definitely needs to open positive. If it opens lower, close it out. You can always buy it back if it comes back up through the T-line. U.S. Steel needed to break out. With it selling off, if it opens lower, you close it out because it's pretty much telling you it's caught in this trend channel. It needs to break out above that upper resistance level. EKSO came right back to where you suspect it would come back to, the T-line. You can start buying this one on positive trading tomorrow because of the breakout move. But if it opens positive, trades positive, use the T-line as your stop. NRZ, nothing wildly exciting. You can stay long as it stays above the T-line. Cliffs, you can see it's having a hard time getting through the downtrending resistance level. If this opens lower tomorrow, you close it out. It needs to stay above the T-line. AMD, nothing. Well, I'd say nothing. It needs to see more. If you're long, you stay long, but it has to get back up through this level pretty quick. Otherwise, you're still kind of in a wedge formation. ALDR, I wouldn't be long or short. There's nothing there. Oh, shorted at 994. Oh, all it can do to stay short is it open lower tomorrow. If it opens positive, close it out. It's just not giving you a good risk reward. It's a flat trader. And EXAS, kind of the same scenario. Oh, left-right combo. You can short this one on a lower open tomorrow. And AMC, there's your fry pan bottom. There's your breakout. Stay long on this one. Don't let it close back below the 50. Mossy, nothing here yet. If you had, there wouldn't have been any. Yeah, that's a toughie. If you bought it somewhere up here, you definitely would have been out the next day, because that told you the buyers weren't there, or it had to open positive and trade positive. I wouldn't be a buyer of this one until it gets back up above the 200, telling you that they did support at the T-line. CVRR, very, very slow uptrend. You just hang on to it. Microchip, you can short this one with the anticipation that you've got a bearish J hook wave 1 and wave 3 should take you down pretty close to the 200-day moving average. Yes, you can short it. XNet, it held up early today, but then you've got a huge morning star signal. If you were long, you would have been out of it when it started trading back below this level because it told you they were coming back to the T-line. If you stayed long, which you shouldn't have, now you definitely have to see it stay above the T-line. You can buy this one, OPHC, ASHB. Yeah, that's Elliott. What is that, Elliott? Gear. There's your little J-hook pattern. Stay long. Have your stop at today's open. You've got a hanging man, a shooting star. If it comes back down through that level, that tells you this is where the sellers were starting to take control. Honeywell, not exciting, but it's a slow uptrend. You just stay with it as long as it stays above the T-line. HQIX, you can be buying this one. Obviously an option trade. Figuring it's going to come back up to this level. There's a good one. Learn While You Sleep CD. Hertz, nothing yet. Had kind of a cradle pattern that didn't confirm. You can be buying this one on strength, the inverted hammer bullish confirmation, and then coming up through the T-line. Wouldn't be one of my favorites. Whoops. And you did everything I just said. Yes, you can be buying it on positive trading from here. You need to see them confirming. This one, if you were long, it needed to break to the upside. If you're still long, it has to open positive and trade positive. If it opens lower, you want to be out of this one. OPK. This one you can buy on positive trading. Your little stutter step. First target should be up here. Second target should be up to the moving averages. Make sure your volume is good. Is this a symbol? Ecom. Another one that got the fry pan bottom. I'd be a buyer above $9, telling me that it is breaking out to the upside. Zenga. You can see the fry pan bottom. You stay long on this one as long as it stays above the T-line with the anticipation that it could be coming up into this trend again. Micron. This would have been a toughie to stay in today. Now it makes it much more simple. If it opens positive, you stay in it. If it opens lower, you close it out. As a matter of fact, you could probably even be thinking about going short, especially with that gap down. Kind of a doji sandwich on SunPower. You can buy this one. I'd buy it above today's high, telling me they've broken this downtrending channel. Amazon's been holding up well ever since the little slow curve, Morningstar signal, scoop type breakout. Safety, put your stop at the high here. If it comes back down through there, you know the selling has started. STZ has to stay above the T-line to stay in it. Newmont. There's your reversal. Now you have to see it get through the 50. That would be your next target, the downtrending channel. AVGO off its J-hook pattern. You just stay long. Snap. That's just not a good, compelling chart. If you like it, you stay long. It's just not a good-looking chart. And INAP has to open positive to continue the bobble pattern, coming back up to the 50-day moving average. MRNS, you can see kind of the wedge formation. So if you're long, it needs to open positive and trade positive. If it opens lower, you don't have a chart that's really moving at all. Okay, good. Yes, you might have to specify that you want to see an actual trade as your stop, not just the bid, because you might be the bid. AK Steel has to open positive also. If it opens lower, obviously no buying strength there. And Watt, same scenario. I would have been out of this last couple of days. There's just nothing there. Wouldn't be long or short at this point. Let's see. I don't know whether I can get the F.S. 30-year bonds. This is the March. Yeah, you can see they're slowly moving up to this resistance level, which basically tells you interest rates aren't moving around very much. ABUS. You can be buying this one on positive trading. Your slow curve breakout through the 50 may be your start of the next wave to the upside. Slow curve is your indication. And NOG, another one that you have to see how they open. If they start trading it lower tomorrow, you close it out because that means you're probably in a bobble pattern also. LOXO, you stay short. This one never has gotten up above the T-line, so look for it to go to the 200. Cat. CBay, nothing. If you look at this chart, which way is it going? Your stochastics are pretty much flat. The price is pretty much flat. So there's no advantage to be long or short in this one. No, these are symbols. AT&T, just one of the worst traders because it doesn't move around very much. If you like it, you stay long, but I wouldn't be trading this one. Philip Morris, same scenario. Just caught in a sideways mode. I wouldn't be long or short this one. And Colgate, same scenario. There's just none of those would be intriguing at all. Oh, this is your message. So now you watch to see when the profit taking's over, then you can start buying because there's a new dynamic to this one. Bullish engulfing gap up on Kirkland Lake Gold. Just make sure your volume is good. I'd be a buyer of this one on positive trading, especially if it got through this level. And swirl, you can see the scoop type pattern and your best friend gap up. You can buy this one on positive trading. Watch to see what it does once it gets to the 200-day moving average. But that's a good scoop breakout. NetEase, when it came back down through the halfway point of this candle, you should have closed it out. You can think about going short on any weakness from here. I don't know where it's going to come back to, but you want to be short. OLED, evening star type signal. Just watch to see what it does here at the T-line. Yeah, the bonds, let's see. These are the 10-year notes. Nothing there. Williams, Sonoma, nothing. If you're short, you stay short. You can see it failed today at the T-line. Eric, we do. Usually we do our private training sessions up at Cuca Lake during the summertime. I haven't done one for a while during the year, but we do have our weekend trainings where we go through the whole gamut of candlesticks, which is the next best thing. It's a two full days. BIIB, nothing. Wouldn't be long or short. Okay. Whoops, kept you past your bedtime. All right. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.